Hey, Doug. I figured I'd give you an analysis of Blythe. So let's see what we got here. Starting with it on a weekly, relative strength is dropping pretty fast. That's pretty bad relative strength. And if the market's up 100 points and the stock goes down $1.19, that's really bad. The second thing is it's about to make a death cross. The 50-day moving average coming through the 200-day moving average. If that happens, that's really bad. Third thing is it's dropping. It closed actually below its 200-day moving average. Now it didn't do it on huge amount of volume, which says it might bounce off it tomorrow. So if it penetrated it with some serious volume, I'd be saying, look, it's time to get out. So there's a chance that it's just testing this line, although it should have been testing the 50. So that's the weekly. Here it is on the daily. The daily, you can see these are swing points, right? And the swing points are going a little bit lower every time. And now we're at a real low swing point. Hopefully that portends that we're going to get a bounce up. So we'll see if this does a little undercut, maybe makes a little double bottom here. You see what I'm talking about? So if it makes a double bottom, then we might have a breakout point here at 35, which of course you're hoping. We get that sucker to bounce up to 40 bucks, and then you get the heck out of this thing, or whatever. Back to the weekly. Here are some of the things that bug me about it. It's that the group is declining, and the earnings per share rating and all that kind of stuff, the SMR rating, things are declining in this area. And these numbers are not looking really good. I mean, you now know what you're supposed to be looking for. The one good thing is it's still got some good sponsorship. There's still some buying, and there's not a lot of selling on volume, which is kind of good. And then you had an up day here, right there. Even though it closed at the low of its day, it was still considered an up day because it closed slightly higher. I mean, I'd probably say that's a red day, but that was pretty high volume. This is the day you want to shoot for. So anyway, I'm concerned about the 200-day moving average, and I just wanted to tell you that before I went on. Let me look at one more thing while I got you. Let's look over here. I haven't even looked. I just pulling it up. And I know you hate these charts, but they've been working for me pretty good these days. So here is the daily. DPO is negative on the daily and the weekly. Bad. The MACD is bad. Again, we already talked about the volume and how it's hit the 200-day moving average. This is a head and shoulders that it formed. That's what these three things are, and that's why you're seeing head and shoulders is bad. Reverse head and shoulders is good, but this is a regular head and shoulders. Head, two shoulders, neckline. This stock is decidedly below the neckline, so you got to keep an eye on it, man. You got to make a decision here in the next couple days. Because it could really hurt you. It looks like one of those stocks that's in that book, but I don't think you pull the trigger until you get more confirmation data on this thing. Okay, looking at it on the weekly DPO again is bad. The MACD is bad. A death cross looks like it's starting to possibly take place here, and you don't want any of that. Okay, buddy, I just wanted to tell you all that. I don't know if that helped or not, or clear as mud, but I'll talk to you later. Bye.